So it's yet more pain in the stock market. It's been about 2 months of this now, up and down like a roller coaster. To yesterday, things were looking bad. So we're down, pretty much everything was red. We'll pop on over to the portfolio, but it's not looking pretty. That is the stock market, I'm afraid. And as I always say, I'm not a financial advisor. Your money is at risk. You need to take your own advice. This is a classic example. Only probably 3 or 4 videos of these updates ago, we were looking at a 5 or 6% return. Now we're pretty much flat. Might as well put the money in the bank. No, don't do that. No, because the bank only give you like 0.5%. You might as well, I don't know, put it on Bitcoin and ride it to the moon. That's a joke, by the way. That's a joke. Don't put all your money into Bitcoin or anything like that. Do what you feel you need to do to secure and monitor your money to your risk level. So seek your own independent advice. So with that said, let's jump on into the portfolio, take a little look at it. But before we do that, please don't forget to smash the like button. Do share these videos around. I know other YouTubers spend a fair amount of time on things and the rest of it. So we do all really appreciate people hitting the like button, subscribing to the channel, watching the videos all the way through, those kind of things. It really helps with YouTube because what they do is the algorithms pick up on the fact that people are watching and enjoying, and then they tie them to other videos and they make recommendations, and it's a kind of community thing really, especially on the sort of smaller YouTube channels. So if you can do that, I would be greatly appreciated. So let's get stuck in. So here we are just in the main portfolio. So you'll see this week we are 0.38% down. But if you have a look on the scale for the week, I know obviously there's a little bit of kind of injection of cash, which is why it's gone up around this sort of area here. But you'll see the portfolio itself was down 3.23%, around about that. I think 3.33 is about as low as it got. And then it started to recover a little bit in sense of it has ended the week at 0.38%. So it's been a bit of a painful week in the market. An awful lot of tech stocks have been selling off. SPACs have been hurt. Anything that really did quite well during the last year through the pandemic is all starting to sell off, and that is, as I've touched on in previous videos, fears of high rates of inflation. Even if it's only short term, people do worry about that, and that has made people basically sell off. So have a quick look through the portfolio here. We won't micro-analyse everything, but you see here companies like tech stocks like Apple were down. Obviously, in the last week or so, that's a fair chunk down. For me, my portfolio is about 4% down, and in the last week 2% overall for Apple. So yeah, 2% down for me. And you'll even see like American Express, they've taken a bit of a hit. That was about 20% profit for me. AGNC, that's down, that got up to about 8 or 9% profit. So yeah, you can see that overall everything is down, bar tech stocks are obviously particularly down. Churchill Capital here down about 13%. And then we look on through the portfolio. Netflix 10% down, PayPal nearly 6% down, and then I think you've got like Square here is 15% down pretty much. Tesla's 15% down, Uber's 12% down, and so on. I mean, obviously these figures are percent down for me, but if you take Uber for example, in the last week or so, it's sort of about 1% up, but overall over the last month it is 20% down. So this is a long-term trend that's been happening of late in terms of tech stocks selling off, although they do start to recover but then they fall back down again. Similar story with Neo, which obviously, as you know, is held in the invest part of the app here. That itself has been about a 10% deduction in the last week. For me, almost looking at a 30% loss, so quite significant. However, this is always a good time to buy, and as you see, I've made a few orders for Neo, so I've spent probably just shy of about 200 quid here. I'm trying to dollar cost average my shares down, or the share price down here. So I've got an average share price of $45 a share. Obviously currently trading at $33, so still way short of what it's trading at, but this is down from the highs of about 53 I think I was on before. And it's a similar story if you go on to Churchill's Capital, which obviously ticker symbol is going to change to Lucid Motors at some point, which might bump up the share price a little bit. So here we are with that. Obviously my average buy price is $20.45, currently at $17.98. So yeah, reasonably turmoil in the market at the moment. It's a bit of a sell, stick it in more stable stocks. As you can see, the pie's been doing reasonably okay. It's sort of steadied its waters a bit at 5.5% roughly speaking. So yeah, overall we've got a bit of a sell-off. It's a good time to obviously buy the dips. I'm not into day trading or anything like that. But realistically, as long as you're holding these companies for long term, they should all recover at some point. And obviously, it's good to not be too kind of saturated in one particular market. So hence why I do a pie, as well as investing in some of these more speculative tech stocks and things like that. And I do plan on putting some more money in. Only this week I put some further funds in and bought various things. I've had some dividend payments and things like that, so you can see here various orders and dividend payments, 15p there. These small amounts here are from the pie that I do. You've got American Express here. I bought a little bit in there, a bit in Square, a bit in Apple, some more in the pie in the last week or so. And then right down at the bottom here, you'll see I bought some in Churchill Capital and Uber, and a bit into wherever it is. Sorry, into Apple. Sorry, it's further up. Actually, I put £50 into them. So you can see that I've trying to dollar cost average down my positions whilst I can. And obviously, there's a bit of a kind of, it's nice to try and buy the dip and, keep yourself kind of ticking along and focused on the end goal, really. So there are a couple of questions from some people about dollar cost averaging and what that all means. And I tried to explain it like buying a pint of beer. Essentially, over your lifetime, you will buy a pint of beer today at, say, £5 for a pint. I mean, I don't know, up north maybe it's cheaper, but down in the south where I am, a fiver probably doesn't even buy you a beer anymore. But let's say a fiver buys you a beer. When you were a kid, probably £2.50 bought you a beer. So over your lifetime, you would have bought them at £2.50, £2.75, £2.30, £2.50. You'd have bought them at £4. You bought them at £3.50, all that kind of stuff. So there's an average price that you would be paying for your beer over your lifetime. Now, obviously, as you get older, you tend to buy more beer. Generally speaking, when you're younger, you can't afford it so much. So your average price is the average price you're buying a stock at. Now, obviously, sometimes, unlike beer, it tends to go down and go back up again in share price. So you're buying your beer at all different prices. So it's more like buying beer over a long period of time and buying it from different outlets. So like JD Wetherspoons in the UK, that's a very cheap place to buy beer, generally speaking, whereas an upmarket wine bar is a more expensive place to buy beer. So hopefully that kind of helps some people understand that. So yeah, And then my question for you is, I can't work out quite what this whole thing means at the bottom here. Total return, £103.42p. I'm assuming, if someone maybe might know more than me about these things, is that this is a £33 loss here, but then here we've got £129 profit. So are these the pie and the main portfolio separated out in terms of return? So where we've got one here in red at minus £33, and we've got one plus £29 and 13p, presumably those two things are netted off against each other to give you this total return of £103.42p. So when I'm saying to you I'm down £33, actually really we need to be looking at this figure. Perhaps someone can tell me if that's correct, because obviously the dividend pie and the pies feature is a separate part of the app, so I'm assuming that they're not joined together to create this. Anyway, hope that's a good little overview for you. I'm sure you're all in as much pain as everybody else in the market, and it's always important to note, as I said at the beginning of the video, I'm not a financial advisor. The market can go up as well as down, and your money is at risk. You can get good returns, but you can also lose money. These companies can go into administration, they can be sold, and the share price can fall down and never recover. So you have to do your research, take your own advice, don't necessarily copy me as to what I'm doing, let's flick on back to the studio.
So clearly a lot of pain in the market, but it's kind of what we expect. The market is not a smooth ride, and anybody that thinks it's given returns is probably a little bit misguided. So I hope you enjoyed that. If you would like to hit the like button, comment below, please do feel free to share the channel, do all the interactive things that YouTube likes. And with that said, I shall see you next time.